Hey, what's real estate people? What's going on? Talking to investors, buyers, sellers, real estate, mortgage brokers, anybody else in the industry, title, insurance, whatever. Anyways, giving you guys a heads up today. Today's May 3rd, and there's a lot of stuff going on. I'm going to talk about some carrybacks and seller contracts and some stuff a little bit. Anyways, yes, looking at Inman News today. If you're a real agent, you got this national group trying to basically say that sellers shouldn't pay the buyer's commission, and trying to, because some of these coilings in the last couple weeks, basically trying to screw real estate agents and plus the feds all over the National Association of Realtors. So something you should be aware of. You should go to Inman News and take a look at it. INMAN .com, and just take a look. If you're a real estate agent or mortgage broker, it affects you too, basically, from as far as charging, because they've already come down harder than the mortgage. Essentially, they don't want anybody to make money anymore, and that's bad. Stay out of it. The seller, yeah, it should pay, as the buyer's paying for it anyways. They get the loan or they're buying cash. So in actuality, the buyer really ends up paying it. There was this guy he had some I don't know if it was what brokers it was, but he owned like 50 offices or something somewhere in the Northeast, and this is the longest, like a year and a half ago or something. But yeah, it's true, the really end up paying for it, not the seller. So anyways, it's all bogus, and it's been, I don't want to say he's getting screwed. Mortgage brokers are getting screwed enough, and it has, because every time you do a deal, it affects a lot of. So anyways, and as the economy slides for hell, there's going to be some opportunities going to open up for investors, especially if you have bad credit. And even if you have good credit too, you can still work it. But credit, they are going to start tightening up the loans, but they're still going to be the subprime, non-conforming, non-prime, whatever you want to term it, stuff. There's going to be out there. I know, because I've got for non-owner occupieds, I've got some. If you want to buy apartment buildings or certain types of homes over a certain value, you can still do it on a non-owner occupied basis. Yeah, but seller carrybacks and seller contracts and buyer's options are going to really crack. Now, areas that are hot, quote unquote, they're slowing down, and that's probably, you take the Case Shilling. I think they talk top 50 cities. And you got all these economists coming on and blah 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 blah. One major mortgage outfit on the secondary market, the guy came out a couple of days ago, it was all over Fox and everything else. So anyways, they're talking about it, but see, there's opportunity there, because the Fed's having their meeting here in a couple of weeks, and Facebook, again, the open market committee raised it another half point, and it's going to go up, and the rates are still low to me at 5%. Anything under 7% is still pretty low, because like I said, when I started in 95, rates were up at 8.5% to 9.5% for a conventional loan, until it went down a little bit in the years afterwards. But anyway, what's going to happen is a lot of markets are going to slow down. Now, in the big cashola, the markets are going to slow down a lot. But once that bubble bursts, it's going to be 2008 plus, because essentially we're steering into a depression. And of course, they call it the super recession. That's what they call it. But 2008 was a depression. This depression will probably be a lot worse, even though the stock market was up today about 30 points when I checked a little while ago. But that's because the market's going to slide with it's going to get hit by 5,000 points in 2 or 3 days. It's going to get slammed. It'll go back down to 26, 27,000 or whatever, and the NASDAQ will get hammered too. And so Europeans, the CAC 40 and the British markets and Hong Kong and the Hang Seng Index and the Tokyo market at the same time. But the thing is, bubble will burst because of the bond debt. It's just the way it goes. But anyway, so back to what I was focused, carrybacks to seller contracts. If you're here and your credit's not very good, you're still down right now, low as 500. There are some funders out there that will still do carrybacks. You might have to put down 5%, maybe 10, maybe 5. There's some that won't. They'll don't have to put down anything except cost. They may only allow a point or two, which is okay. That means the seller can cover some of the costs. You just add in the price. But cool thing about seller back is that you have a seller who's going to put up 20% of basically their equity because they can't move the property. Property's been sitting for months to a year. And this is important to remember. If you're dealing with a real estate agent, which most of you should be dealing with, or if it's an off-market deal, it's one thing. You have lawyers, but a lot of lawyers don't write these correctly. Anyways, no offense to attorneys, but a lot of times, a lot of money. And if a real estate agent is experienced doing, which is kind of few and far between, they'll know how to write up, and the mortgage broker can help them. And essentially what it is, the seller's going to take some of their equity. So you got to look for a house, especially when you're outside of a metro area, like in more of the country area or further out. Home's been sitting like 6 months, and they've got equity, and they might be able to provide it. So those where the seller will do a 20%, 25% carry, and you want to do it for a 5-year note. Sometimes you can only get 2 or 3 year, but do it for a 5 year if you can get it. And sometimes you have to pay the interest on it. Interest, make it 7-8%. So it's doable for the sellers. They get paid. Or when as I back ended it, where I did a 3, that's a 3-year back. It's a note, and basically I didn't pay any interest for that time. And basically what it is, I got the interest payments, and they were added in, and I paid it on the back end after I refinanced it. So that's another way to work it. See, I work these deals, and the thing is, because I've done stuff, and also too, if you're buying a commercial building, or you're buying a bigger house, and let's say you're going to fix the house up, right? Let's say you get the note, and you have it in the contract on an addendum, and basically on this an addendum, you want to make it outside of the contract, separate addendum outside. You can have an attorney write it up, or you can write it. You can have your agent write it up, and it has a certain way. But you can do another contract where you can make the note movable. And I've done this a bunch of times. And then you fix up the house around, you might refinance it, like Grant says, because this is where I really juiced it. Me and my juiced it to the max. I mean, we had some houses refinanced 3 times. And I've done this where I've got it moved notes on the other houses of a building or something like that. And I fix up the house, refinanced it, boom, waited another year or 2, boom, refinanced. I just paid out the seller on the first crack out. And so, I mean, this can work to your advantage. You can totally work it. So this is you need to look at, but you need to look for homes that are just months or more on the market that aren't moving. And you got to find out if the listing agents scored away, they'll tell you what the deal is. They can get permission from the seller, but they'll tell you what the deal is. Because what happens, a lot of the listing agents aren't gonna put out they're gonna do a carryback. Now, I used to do in my listings, I could start to do a carryback or a sell contract. Yeah, I was gonna let out, especially a carryback, because I know I was gonna get paid. Seller contract, not so much, but sometimes you do it anyways. The seller just cuts you a check. You cut the check, the whole commission. Anyways, so the seller carryback's cool. There are some subprime funders or non-prime, stupid term you want to use, that'll go ahead and do it. And in California, you've got some that go as low as 500, and you do in Oregon and Washington because they've got more lenders. But California has more lenders than anybody in the country because they have 45 million people there. Well, it's a lot less now because people are moving out. But you go to certain areas, Southwest, Midwest, Southeast, even in the West and East Coast, there are places that are going to be further out, outside of a city area. We're still going to be. So the areas you can look at seller contracts, depending on how they're written up, you can work it. But remember this in a seller contract, you don't have title to that. It may be on, you can put it on title, but you still don't retain title to that property until the seller paid off. Either you refinance it, or you go ahead and you that amount of that mortgage off. As a seller contract, you're going to get a higher rate, and the seller might be their payment with a little interest on top. Say the rate's 5% now. Let's say you get a seller to do it 5, 7.5, let's just say 8%, or even 8.5. You get amenable to the seller, you're gonna have to put some money down. Now, a lot of times you put that money down, but you have to write this in the contract, and your agent, you need to jump on those to your buyers and investors that, and if you're a listing agent, I mean, if you're a, because depending on how it's written that you put out down on the property, it depends allocated out. You may say you put down $30,000, but what may happen is only 20,000 of that is going to actually go towards actual amount owed, because you're going to have a seller that's going to have a low mortgage on it or no mortgage. So the seller takes, let's say the seller could take 20, 25,000, and that's good applies towards mortgage thousands for the seller, but it has to be spelled out how that money is put down. I'm just using an example, or all 30 of it can be put down towards the amount due, and then they have it in the financing addendums, and you research an addendums written up separately. Also, too, on the seller carrybacks, each county in the United States has a special, basically deed of trust, a special note, and it's different in each county. That's why I'm being generic. This, and it has a certain indents, has to be indented a certain way. It has to look a certain there, and that's a per county basis. Even though they're following state law, from their county councils when they write everything up. You just got to remember that seller contract's a little bit different, but title, and it's not title. But if you are doing it, and you're using a real estate agent to do it, and you're using title and escrow or a lawyer, you need to make sure that stuff gets put on title. And I'm just telling you right now, you need to do it, because I've seen stuff go sidewinder and buyers get screwed, because an option to buy, a lot of people do option to buy, especially in country areas like seller contracts and carrybacks. Option to buy is only an option to buy the property. So if you put down 30 grand, you ain't getting that. And you're making a payment and whatever interest on top. That's what the seller wants. And you're doing it, it could be a year, 2 years, 3 years, whatever. I've had cases, and I even know this with people I know. They'll do an option to buy, and they can't make the time on the refinance. Fine. I had a 1 year contract and an option to buy for a buyer in Tacoma, Washington. It's about 30 miles from Seattle. And because I've owned tons of properties, and I had an option to buy. It was a 1 year option. They couldn't make the option on the refinance. They just turned around, forked that grand, and we extended it out for a year and a half. No big deal to me. I was still getting my payment. Everything got paid off, and it was going to score away. That's my money. And then a half later, they turn around. I refinanced it, and boom, they got the house. So there's options there. Options can be tricky. A lot of times, the multiple listing services across the country, every service is different. I mean, I've got one listing service that covers Lake of the Ozark region, and the Jefferson City, Columbia, Missouri have their own one. It's really lame, but this is how it goes. You got other counties that have the same. In Washington State, Northwest most of the listing service covers most of the state, but then you have Wenatchee, Washington, which has their own too. Even Spokane does. So even though it covers most of the state, but they're still independent listing services, and they also too, they hate agents that they don't like them infringing on their turf. So that's why they made to basically join the listing services, which I haven't got sued yet, but it could happen. Anyways, here you have a lot of agents that go back and forth into different multiple listings. So it's not as bad here, but in Arkansas, same thing. Little Rock, outside of Bentonville, is a bunch of counties where Walmart's at. Oklahoma, Tulsa, it's all in one service. You go outside of the ways, it's different. So same thing in Texas too. But anyways, so that is a good opportunity to work it. If you're getting a house, commercial building, your credit's not so good. Work as long as you got some cash. Are good too. You're gonna need some cash to do it, and basically buyer options are good too. Are completely separate. But remember, on the seller option contract you want on title. Buyer's option, you're not going to put on title. You could, but don't do that. They won't put those on title. And that's just the case. Now, if you need to get it represented by an attorney, make sure you do it. Make sure you tell your agent if you're doing it for sale by owner or somebody you know, make sure you get a competent real estate attorney, because not all real estate agents are mortgage brokers. So if you need an attorney, make sure you get one attorney. If you can talk to an attorney, go talk to him. Attorneys are deal killers, so you have to be careful. But that's just, they're doing their job. But you just have to kind of blow wild. Don't just have them write the contracts. It'll cost you some money for doing it for sale by owner. If you're, you want to just to have them check out a purchase and sale, have them check it. A lot of times the attorneys at times they're going to look at what they're going to already have involved in multiple listing stuff. If the really have their associate brokers licenses, a lot of them do, because they do deals on this. That's pretty commonplace, and that's okay too, because it means they're experiencing. And that's something to think about. But as the economy is ready to plunge, it plunges more. As the inflation is starting to really cross the board, it's going to DTI of buyers that are trying to buy. So this is another avenue. Excuse me, but I'm telling you, it's going to fall, and there's going to be opportunity. I don't care where you're. I don't care if it's Seattle, Portland, the Bay Area, Sacramento, San Diego, LA, around there, anywhere in the Southwest, Southeast, the Northeast. I mean, there's going to be opportunity, because not every place is doing really great. You know what I'm saying? And the problem is that a lot of these agents have been getting over for so long because the rates are low. And so the mortgage brokers too, but for the real estate agents, and they've been getting over for a long period in the top 50, 60s. But even then, there's a lot of places outside they've been doing. Right that I'm at, they sold $2 billion of real estate at Lake of the Ozarks. Well, when a lot of areas it'd be kind of laughable, but for this area that's actually pretty good, last year $1 billion. And you got some agents up there, some of the top duo, right? You got a $100 million, which is pretty good. And that was in the top 1% in the U.S. You know, but the thing is, that's not that way. So, anyways, their days are going to be number two around here that have been around for a while. And some started right before the disaster happened in 2008, but it's going to come again. It's going to be another depression. You have to buy and sell all the time. So you just need to be aware of this. That's why I'm bringing these other options up, because stuff's going to really start slowing down. And there's going to be a lot of inventory on the market, and they're not going to be able to move. It's commercial and residential. So there's going to be advantage to take a look at. Also, don't forget, if you're in the country, suburb areas, and the real estate starting to slow and all that, August, September generally is a tax sale time. So you need to start looking at doing tax sales. I'm all big for tax sales. You can find them, you can get them, because they're around. And those for commercial or residential. You know, there's a lot of opportunity out there. If you're a real estate agent, you better get cracking. You better start looking for more. You better be doing residential and commercial. You better get your mortgage broker license. Mortgage brokers, you better get your real estate license. You better start doing commercial and residential, because there's a giant bend in the road coming, and it's going to bend real far. It's going to be worse than 2008. And even though I was real estate, but I still got caught and slammed pretty hard. Like a ton of people I know got hammered really bad. I've been to the turbulence in that. So, but this time it's going to be worse. That bomb's a lot worse, and the bomb is going to hit up. So they're looking at a 15 to 25% increase and so some are saying 10 to 20%, but it's going to be somewhere up. Conservatives say 10 to 20% somewhere, and that's a war. And so affect a lot of stuff. So anyway, so there's opportunities for you as a buyer, first time buyer, second, third, fourth, fifth time buyer. There's opportunities if you're an investor. Start looking at this stuff because this is another way for you to work it. So, and if you got some cash, that's good too. If you're an investor, buyer, is basically to buy property for the least amount of cash out so you can conserve it. You have to fix the property or just to conserve your cash anyway so you can buy more stuff. So, like I said before, you make sure you have that's for a while, you have a competent mortgage broker. Stay away from the banks and the credit unions. I cannot emphasize this enough. Stay away from banks and credit unions because they have limited resources. They can't do very much. The mortgage people there that do the mortgages are incompetent appraisers. And also, too, it takes a long time to get out of underwriting. That's just how it would go. Banks and credit unions are a no-no now. Different deal. I still go to and I compare, but you can get a better deal with a mortgage broker. But if you're a real big builder, yeah, you're going to get lines of credit from a bank or credit union in 2 seconds. So, whole different deal. But anyways, like I said, and you have to consult your attorney, consult your accountant. If you need to consult that a real estate attorney because you're not sure, do it. Do it. If you have a contract that you need to consult an attorney, do it. That contract you need to consult your accountant, do it. Consult your accountant before. Make sure if you talk to a mortgage broker, they give you a list. If the mortgage broker doesn't give you a list of things that you need, make sure you talk to them. If they're right now, I've got no doc loans. I just got a thing today. And if you want to do state loans, I've got that too. In the properties, okay? And non-owner occupied, you have to do non-owner occupied. Otherwise, the lenders will go ahead and they'll do a forbearance close on you and you'll be toast. But the non-owner occupieds, I've got them. Also, in addition to that, too, I do have some fix and flip loans up to 90%, which is pretty awesome for commercial properties. Anyways, I just won't go over all the stuff for you today. If you can go to nickforecast.com and go ahead and leave a question for me. You got a Facebook cast. You can go to my finance site, go to cobrafunds.biz, or just leave a comment or whatever. And some of my site, subscribe, and I'll see you next time.